All right, welcome to 6-3 Work Together. Well, we'll be doing some of our financial analyses of our accounts receivable ratios. So let's make sure we open up our instructions here. I think I'm actually going to do a split screen on this one just because I think it'll be a little easier. So it says that our financial analysis of accounts receivable is going to be for LMK Industries, who offers its customers N30 credit terms. The turnover ratio for the prior year was 6.4, and the following account balances were obtained from their industry records for the current year. I don't need to read that. I will guide you through what you need to do. So it gives us some information about our accounts receivable and our allowance for uncollectible accounts, as well as our net sales. And our first job is to calculate the accounts receivable turnover ratio. So please remember that the accounts receivable turnover ratio is net sales divided by our average book value of accounts receivable. So this average book value of accounts receivable is what we need to figure out first. So in order to find our book value, remember, we need to take our total accounts receivable and subtract out our allowance for uncollectible accounts, because that is our contra account to accounts receivable. So as you can see, it says our beginning inventory, or excuse me, our beginning accounts receivable is $126,468.15. Then we take out our allowance for uncollectible accounts at the beginning of the year, which was $4,123.27. And the difference between those two is going to be our book value of accounts receivable at the start of the year, which is $122,344.88. Then we go to our ending. Our ending again is $135,643.58 for accounts receivable. And then our allowance for uncollectible accounts is $5,754.77. So the difference between those two again will be our book value for accounts receivable, which is $129,888.81. So now that we have our book value of accounts receivable, now what we can do is figure out our average. So we take our beginning book value, which is the 122,344.88, and we add that to our ending, which was 129,888.81. And then we divide it by 2. So you just need to get your handy dandy calculators out, add your two book values of accounts receivable, and divide that number by 2, and we end up with an average book value of accounts receivable of $126,116.85. Now we can actually calculate our accounts receivable turnover ratio. So we take our net sales. Our net sales for the year were $847,386.56. Our book value of accounts receivable is what we just found here, that 126, this guy. So we're going to plug that in right here. 126, 116 and 85 cents. And when you do that calculation, you end up with an accounts receivable turnover ratio, rounding correctly, of 6.7%, or excuse me, 6.7 times, I guess, which means that on average, we turn over that 126,000, that average book value of accounts receivable, we collect that or turn it over 6.7 times throughout the year. Now that we have completed our accounts receivable turnover ratio, we can now figure out our days sales in accounts receivable, which is what step 2 says, is calculate our days sales in accounts receivable. Now, when we do this, the one thing that we normally have done is always used 360 when we were calculating things before, because of the fact that our business could technically be open every single day of the year. We don't know that. It does not specify. We actually use 365. So our days in the year is going to be 365. And then our accounts receivable turnover ratio is 6.7. And then again, remember what I told you about your days sales is that when you take 365 and divide by 6.7, you want to round to the nearest day. And so when you do this calculation, you actually end up with 54.477. And so you want to make sure that you round to the nearest day, which of course would be 54. Okay. So our days sales is 54, which means we collect our average accounts receivable every 54 days. Now it asks us to do a little analysis here on whether or not LMK Industries did what, either increased or reduced the time required. So we know that this year it was 5.4. We could see what last year's was because it said last year we had a ratio of 6.4. So if we took 365, um, 365 divided by 6.4, you end up with 57 days. So we actually reduced the time that was required to collect our average accounts receivable, which is a positive thing, right? Reducing the amount of time. Which it says we have N30 credit terms. LMK Industries, though, still needs to improve its collection of accounts receivable because if you remember from the lecture, it said on average, how long should we be turning that over? If you remember, we're shooting for every 30 days, okay? Because it says we should have 30 days to collect our credit, and we're at 54, okay? So still not great, but better than it was in the past. So what the business needs to do is modify its collection procedures, including conducting more rigorous credit checks on our customers. Because if we have, hopefully, have a better idea about whether or not they're going to be good customers, then maybe we can make smarter decisions and increase our accounts receivable ratios. So that is the end of our 6-3 work together. So you can go ahead and do the 6-3 on your own as well as the 6-3 application problem.